Hey there, it's 2020, and with that, 2020 means great vision. So if we're looking at the charts, what I'd like to do is run with that theme for a little bit, the 2020 vision. So we're going to take a look at some blank charts. And I know with a lot of traders, if there's no indicators on the charts and the charts are just blank, it's a little bit overwhelming. You don't know what to do from this point on. So we're going to take a look at a blank chart and I'll break it down so you get a better idea of what it is that I see and where the market can potentially go without the use of indicators, without the use of any of these additional tools, just using the chart itself. Again, we're going to get ourselves a little bit of 2020 vision here. So let's go to a chart right now and we'll take a look at the pound Australian dollar. So we've currently got the pound Australian dollar. This is the daily time frame. And right now, we're at a position where the price could either go up or go down. What do we do? Now, for a lot of traders looking at this, again, it's a little bit overwhelming. You're not quite sure what to make of it. Is the market going to go up? Is the market going to go down? Is it going to move up a little bit before it goes down? Is it going to reverse at this point? You know, where is the market going to go? If I were to ask that question, I think a lot of traders would be stuck. They wouldn't know what to look at and what to do. Now, I'm going to break this down and I'm going to show you exactly what it is that I'm seeing that gives me, kind of an idea as to what I'd like to trade, what direction I'd like to see the market go. Now, the first thing that I want to point out is the length of these market moves. When the market is in a trending direction, when it's going either up or down overall. Like in this area here, we've got a market that's moving down, and then in this area, we've got a market that's moving up. The market tends to move in the trending direction further than the pullback. So from here, we're looking at a market that goes from bottom to top. I'll thicken this up just a little bit. I'll make it black so we can see the better colors. There we go. So we get an idea of this big market move. Again, we've got another big market move, and in here, we're looking at the bigger market moves. When we look at the pullbacks in between, they're not very big. They're pretty small. And the same thing goes for the opposite direction. We get a big market move going down. We get a big market move going down. The pullback in between, it's very small. So if I take that information and I take a look at what's happened recently, we've got this market move from the top to the bottom, and when you compare it to other market moves, it's fairly large. This one is a market move that is comparable in size to this, to this, to this, to this. When the market is making its decent sized movements, it is going to be a fairly big move, and that is what I would consider this downward market to be. So I've got now an idea that because I've got this larger than average, or one of the bigger, I guess there's two averages. You got a small average as the pullback and a bigger average as the market move. We've got this bigger average. This is the bigger market move. Now with that, what are the chances that we're going to get a big trending market move down and then a big trending market move up? Of course it could happen, but the chances are slim that we're going to get one followed by the other. So with that, what I'm considering is a pullback and then a continued market move downwards. I'd like to see that the market continues to move down from here. Now, how far can the market pull back? Well, that's a great question. Let's take a look at a couple of different things. I'm going to start with an area of support and resistance. We've got resistance here, and support all along in here. When we can find an area where support and resistance are all kind of coming together at the same price, and it doesn't have to be the exact price, but a close area, we have, again, an area here, and one in here. 3 in here, 1, 2, 3. This is a good heads up as to a potential area of effectiveness. The market will be affected in this area, potentially. So we've got a few different instances where this has been the case. I'd want to keep my eyes open for something like this. All right, so I've got that going for me. Another tool that I use quite a lot are Fibonacci pullbacks. So if I'm going to draw the Fibonacci retracement from the top to the bottom, what I'd like to see is a pullback into this window. Now this is between the 61.8, 38.2. We've got a market that could potentially pull back into anywhere into this window. Could be the very bottom of the window. It could be anywhere in between towards the top of the window. As long as we get into that window, we are primed for a reversal. And I'm going to show you a couple examples of that. When we look at, well, this market move here from the top to the bottom, it pulls back into this Fibonacci window, again between 38.2 and 61.8 before it moves on. Let's look at that again. From here to here, from this low to this high, pulls back into the Fibonacci window before it moves on. This is something that happens often enough that I really do want to pay it some attention. Now, if I do this from the top to the bottom, I'd like to see that we get somewhere close to this Fibonacci window. The market would be affected by that. So when I couple that with something like this, I've got an area of support and resistance. I've got this Fibonacci window. This becomes a really nice area where the market can potentially bounce. So with that being said, this becomes a turning point, an area that I'd like to see the market short, that I'd like to see the market move down. Now, it may not happen. The market may not do that. But the whole point of this kind of assessment is to formulate a game plan. If the market does this, then I'm going to be ready to do that. I'm going to be ready to trade. And in this case, if the market gets up into the area it's currently at, if the market is going to start doing things that provide me a short signal, then I'd be more than happy to take a short from this. I'd love to see that we get into this area, and then it could be on the daily time frame, could be on a smaller time frame, the 4-hour, maybe even the 1-hour time frame. We could be looking at an opportunity to go short. Your trading system will provide the signal for you, but this is how I'm taking a look at something that doesn't have any indicators, that is just pure data. It's just the chart. I'm not feeling any lag. I'm not feeling any pressure to be trading in the trending direction or looking for overbought or oversold or anything like this. I'm just looking at what the chart is trying to tell me, what the market is telling me. And for me, if I were to take a trade based on what I'm seeing here, my preference would be a short trade. I'd like to see that the market drops. Now, we had discussed this in the Forex Masonry members area earlier when the price was down here. We had looked at all of these moves, and every one of these were fairly predictable. We were able to determine where the market was going to go, and this is the current one. The market has dropped down, has pulled up, and we had looked at it down in here, and it's moved up considerably, and it's getting itself into that zone, that retracement zone. And then from here, the short opportunity would be the one that I'm likely going to take. That's the one that I'm making preparations for. And this, again, this is based just on this blank chart without any additional indicators. Just what's the market doing? Where's the areas of support and resistance, and so on. The bigger movements, the pullbacks, all of these different things, just little things that all come into play, and they do feed me some information. And from there, my opportunity that I'm looking for is to go short. If we do go short, how low can we go? Well, I'd be looking for a market to move down. Now, first of all, this would be an excellent target, would be this area of support. We could see that the price bounces off of this and moves up. But if we are in the change of trend, if the market is starting to change its direction, there's a couple of different things that we could pay attention to. Now, again, if the market is starting to change direction, it means that the new lows will get progressively lower than the previous lows. In the uptrend, the highs get higher and higher, as we see that here, and the lows get higher and higher. And in a downtrend, the lows will get lower and lower, and the highs will get lower and lower. And that means that ideally, if this is the beginning of a new downtrend, that the new lows are going to get lower than the previous lows. So we could start aiming for something that's a little bit lower. Now, again, with my Fibonacci retracement tool, I like to target something like the 27.2. So when I get a signal to go short, this 27.2 becomes a very nice potential target. And if I look at this, there's confluence in here. Get the right tool. 27.2. I'm looking at this 27.2 level. Here I see it's an area of resistance, an area of resistance, an area of resistance, support, resistance. So this becomes a nice target because I've got confluence, because I've got other things that are lining up with this area. All right, I hope this made some sense. We're taking something out of nothing. We're taking a blank chart, and just based on what it is that we're looking at, we can put all these little pieces together and ideally come up with a game plan. So I hope that makes sense. Again, we're looking at the year 2020. We're brand new into the new 2020 year. And with this 2020 theme, I would like to introduce some of that 2020 vision. Now we're looking at naked charts. And from there, what are the most likely scenarios? From that point, you can throw on your indicators and use your different trading system, but at least you'll have a bias. You'll have some kind of idea where the market is most likely going to go. And then from there, you take the indicators and the signals that it's giving you and trade in the direction that you think the market's going to go. That is going to really do really well for the bottom line. You are going to have more profitable trades and fewer mess ups. Fewer fake outs, simply because you're trading in the direction of the overall bias. All right, if you want to check me out, I'm at forexmasonry.com. We've got a great members area where we do stuff like this all the time. Daily reviews, market setups, and so on. Forum is there. Come and talk to me. If I don't see you in Forex Masonry, I will see you in the next video. You have a great trading week.